how great they are in their P&L. And then we get that rinse out like we saw a few weeks ago, and traders are starting to feel it more, and it's utilizing that as part of your strategy becomes pretty key. But in this optimization, you see classic buy points have become areas of chop. For me, they require too wide a stop location. And what I call is I want to mix the micro with the macro, right? And here is a chart of seed containers from How to Make Money in Stocks from 1976. Classic weekly cup and handle buy, right? And he's buying through resistance, which I told you that's what we started doing at T3 in 2013 when we had that crazy market run. And I had to unlearn this strategy because I was just getting chopped up, losing money in stocks that eventually went higher. And we'll look at this JFrog, for example, a nice little cup and handle on the weekly. That's a classic technical buy point on the weekly chart. Here it is on the daily chart, right? We see this area of chop. How much size can I really have if I'm buying in this area? Where do I put my stop? How can I have a huge portfolio allocation to this stock at that juncture, right? And now where I'm buying down here, that's the advantage of my strategy. I can really load up on stock. I'm buying at a huge inflection point where if I'm buying here and I take a loss, I told I'm just completely wrong in the stock, and the stock probably needs weeks to set up. But if I'm right, this is what we get. We get this huge winner on tight risk where I have that huge weighting. So the advantages of optimizing classical technical analysis, I'm buying with quote unquote the first buyers. I quantify my risk at a price point that indicates your trade is wrong if failed. Again, if I'm buying, this day up here and I have a tight stop, maybe I get tailed out in one of these days. I'm not going to let that happen anymore. I'm avoiding breakout area chop, and I'm allowing for positioning into weekly chart breakouts on extremely tight relative risk. And this allows extreme juicing of an R, right? The risk reward in a trade. And it gives the optionality of taking profit into strength while holding significant portfolio weighting for manageable long-term swing. I have tried to be the guy who doesn't take any profits. And what would happen is I'm puking these stocks up at the wrong time. I'm getting shaken out with the weak holders because I have too large of a weightings.